Over the past decade, Tesla investors have been made millionaires just from holding the stock, and Tesla has shown the world that the EV revolution is here to take over. But many people still believe that Tesla is overvalued and could soon be crushed by some serious competition.
What?
So in this video, I will explain the catalyst and revolutionary product that could send Tesla stock on a 300% rally and send the stock much higher, as this could give us as investors some massive returns. And by the way, before we get started, I'm not going to ask you to buy my course or to check out my sponsor. I will only ask you to hit that like button and subscribe if you haven't done so already, as it really does help out the channel. Now, as an investor myself and someone that has about 80% of their total portfolio into Tesla, seeing the price drop like it's been dropping since at the beginning of the year can definitely mess with your emotions. But just like there will always be Tesla bears and bulls, the question of whether Tesla stock is undervalued or overvalued will continue to be a topic for debate. Now you see, Tesla continues to perform well and thrive despite seemingly endless dilemmas today. And as a clean energy company, Tesla is considered the market leader in electric vehicles. Tesla also remains to be at the top of the game. You see, in fact, Tesla shares rose nearly 700% in 2020. And Tesla stock, just like every other stock in the market, has become harder to predict, given all the changes in the world that keep having an effect on the economy. But on the other hand, there are also predictable changes due to decisions made by people or the government. You see, in late July, Senator Joe Manchin of West Virginia reached an agreement with Senate Majority Leader Chuck Schumer, worth hundreds of billions of dollars to combat climate change, lower prescription drug prices, and raise taxes. The bill also represents a slimmer version of a massive domestic spending plan, Build Back Better, which was a central pillar for Joe Biden's first-term agenda. You see, this bill would allocate $369 billion for energy security and efforts to combat climate change, as well as $64 billion on extending subsidies for the Affordable Care Act. And Joe Biden also called it the action the American people have been waiting for. And this addresses the problems of today's society with high healthcare costs and overall inflation, as well as investments in our energy security for the future. Now, if the bill passes eventually, it could be a big catalyst for all EV manufacturers. And at this point, there may be questions as to how the bill could influence and affect the EV industry. What is the EV tax incentive, and how will this tax credit or incentive impact demand for EVs? And in that regard, how will it impact Tesla, and what are the pros and cons of an EV tax incentive? Well, the bill is over 500 pages long, and there's a specific section for the EV tax credits, taken into account that some portions of the bill are bound to change as it passes along different offices. But based on the currently available information, there will be a $7,500 tax credit for new electric vehicles and a $4,000 tax credit for used EVs. And of course, there are factors and requirements to be considered, like the income requirements for new electric vehicles. But if you're a joint filer for less than $300,000 and then $150,000 as a single filer for used vehicles, the income requirements are basically $150,000 for joint filers and up to $7,500 for single filers. Now, there are also corresponding price requirements for EVs. So if the EV is an SUV, pickup, or van, it can be priced up to $80,000, and EVs above that do not qualify for these EV tax credits. And for smaller vehicles, it is up to $55,000 in price. And for used EVs, this is only applicable if the EV is up to $25,000 in price. So if this bill is passed, it would generate new demand and maybe will possibly lead to price increases. If and when that happens, the wait times for Tesla cars would not be so ridiculous. Furthermore, it could encourage Tesla to pull up factory growth plans in the US and release new models sooner in the long term. And while Tesla does not necessarily need that new EV tax credit to continue its 50% year-over-year growth plans, it could likely increase demand for all EVs, including Tesla vehicles as well. But in turn, this could increase the prices for their cars and increase gross margins, as well as increasing operating profits. And that being said, this new EV tax credit, if passed, will bring positive changes to the company, and any good news or any news is good for Tesla, and it's also good for the company's stock. So any positive effect brought by the bill on the company will be reflected on the stock, and this could make all of us Tesla investors very happy. Now, in fact, according to Cathie Wood, CEO of ARK Invest and big Tesla bull, she said that Tesla will take the biggest share of the electric vehicle market, and it could take 20 to 25% share of the total auto market in 5 years. and this is by 2026.
Can I ask about your view on Tesla in 5 years? I'm a car guy, and I've driven a Tesla, very impressive performance, but I mean, Volkswagen has a lot of money. General Motors and Ford have a lot of know-how in this industry. Everybody's going to come at them, and isn't Tesla going to be, you know, Friendster in 5 years compared to many different new Facebooks?
Well, we absolutely not. Tesla, if you're analyzing cars, not by brand, although its brand certainly has done wonders in the last few years, but if you look at range and power, the combination of those, most other auto manufacturers, unless they want to lose money on the cars, most are not going to be able to keep up with or to reach Tesla's combination. So that's very important from a performance point of view and a range point of view. Branding is something different. These other auto manufacturers have brands and a lot of brand loyalty. But I think as consumers start to shift from gas-powered to electric and look at the specs of the different cars, they might still be persuaded by brand only, but they won't have as good an electric vehicle as Tesla will provide. And actually, we've been studying the CapEx schedules for traditional automakers versus Tesla. Tesla is now going, within the next year or so, is going to spend more on electric vehicles, if it is not already, than either one of those companies. So here were the behemoths where, 5 years ago, when most people were saying, Tesla doesn't even have a shot to exist.
And in ARK's open source Tesla model, they outlined their expected value of $3,000 per share in 2025.
Well, even now we're going to put out another model on GitHub I'm going to say within a week. Our last one is from about a year ago, and you'll see from that model that our price expectation at that time was $3,000. So there's still a lot of running room ahead for Tesla.
And in fact, Elon Musk told employees that he agreed with Cathie Wood when he stated that Tesla is worth $3,000 per share if they perform well. And let me know what you think down in the comments below. Do you believe Tesla is worth $3,000 a share? Because Elon said that it will indeed have a price tag of $3,000 per share, which then could make Tesla's valuation $3 trillion, making it the world's most valuable company. And as of today, Tesla is currently at $700 billion in market cap. And very recently, ARK Invest have updated their price target due to material changes, including autonomous ride-hailing and also capital efficiency estimates. And the new forecast has been pushed back 1 year to 2026. The updated model by ARK Invest shows updated assumptions by the total market at each price point and the probability that Tesla will solve full autonomous driving. They actually expect more autonomous ride-hailing for higher price points, and according to the updated price model, ARK Invest has pointed out a target of $4,600 for Tesla by 2026, and concluded that there is a 25% probability that Tesla shares will be worth $2,900 in 2026 in a bearish scenario and $5,800 in a bullish scenario. And if that happens, Tesla stock will be impossible to buy for some of the average retail investors and will be made available only for those who are already at the top. But that's of course if Tesla does not decide to do other stock splits in the future, which I am sure it's going to happen. Now, according to ARK Invest, Tesla robotaxi business is a key driver to Tesla's profits. And because of ARK's high conviction in Tesla's full self-driving, they have to constantly be updating with how the robotaxi business will affect their model. Now, keep in mind that ARK Invest likes to invest in disruptive companies. And it's really easy to say that now, and it's even easier to agree with someone when everything is going right in the market and stocks are only going up. I mean, think about it. Doesn't it make more sense to buy when it's red instead of when we have green days in the market? But at the end of the day, if you look at the longer term picture, Tesla is launching new products. We have the Cybertruck deliveries expected to start in 2023 along with the Roadster. They're also announcing new Gigafactories in the US this year, along with more announcements of their full self-driving and Tesla Bot. And all of these new products and expanded production should keep the revenues on an upward trajectory. So wrapping up, just remember that I like to keep a long-term focus and I like to think long-term and only invest money that I can afford to keep invested and not take out for the next 5 to 10 years. And I also read every single one of your comments, so let me know what you think about Tesla. Do you think that we could see Tesla stock at $3,000 or $5,000, just like ARK Invest has said? And with that being said, thank you guys so much for watching. If you enjoyed this video, do not forget to like and subscribe for more. And if you want free stocks, then be sure to check out the links down in the description below, as you can get up to $1,800 in free stocks. Again, thank you guys so much for watching. Until next time.